Good evening. Welcome to the ShadowTrader Video Weekly for Sunday, October 14th, 2007. Baidu, also known as Baidu.com, is the chart in front of you. And the reason I want to start off with Baidu is because Baidu was the catalyst for the selling on Thursday. Essentially what happened was JP Morgan and Chase came out with some negative comments saying that third quarter revenues are going to come in slightly lower than expected. Baidu sold off extremely hard, as you can see on Thursday, from about 1 o'clock onward, from 360 down to lows of 301. 60 points in just a matter of hours. What this did is it then caused a slide in a lot of other tech issues such as Apple, Google, Research in Motion, Garmin, from 114 down to 105, and yes, it did trade down to here. Absolutely amazing. And of course, took the SPX right along with it. 30 points from the high to low in the SPX. Obviously, some sell programs were triggered here. Dow got smacked. NASDAQ Composite got smacked. So the question is, just how bearish was it, or should say, is it, in terms of what's going to happen going forward, given that Friday was an advanced day, right? Friday we went up. As we know, Friday the Dow went up about 78-ish, S&P tacked down 7 and change, NASDAQ Composite went back up 33 points. So, let's take a look at our daily on the SPX. The first thing I want to point out is that the action was pretty bearish on Thursday. We did have a distribution day. We'll get to our volume matrix in a second. There was an increase in volume. Friday, we went up a bit. However, Friday was what's known as an inside day. Inside day is when the entire range of the prior day is inside, the entire range of the current day is inside the prior day. As you can see, it's inside there on the SPX, and of course, it's inside on the Dow, right? Right inside, and CompQ, same thing. NDX, same thing. So all of the majors here had inside days. Now, I generally tend to believe that an inside day is a continuation of the prior trend, which in this case would be continuation of the downswing, right? If we look at a Fibonacci retracement of what actually happened on Friday, the bounce was less than 61.8, right around 50. 50% retracement from high to low, and I would have to say it was relatively weak. Volume also was lower on Friday, right? This is your volume action on the New York Stock Exchange on Thursday, and the next day here is your volume action on Friday. So volume did come in lower. Okay, so let's take a look at some of these leaders, and we'll see how they acted. Now, here's where it starts to become a mixed bag. First thing I want to show you is this. One of the reasons that this market sold off so heavily, not only because of the Baidu, but it was basically the fact that this rally has been led by tech, as we know. The NDX has been up a much bigger percentage gain than the S&P and the Dow, and has broken the prior swing highs much earlier, right? The SPX only recently broke out over the 1555 level, right? Whereas the NDX, as you can see, was clearing this area of the prior swing highs a while ago, and the CompQ has just been barreling forward, right? One of the things that precipitated the sell-off, I felt, was the fact that on the NASDAQ, for instance, you were already starting to trade outside of the channel. So this is extreme. Whenever you have a channel like this, and even if you put it up higher like this, you are still trading outside of the channel. You're hugging the top, and you're even going so far as to be like, you know what? Forget the channel. I'm so strong, I'm going to trade outside of the channel. Whenever things trade outside of the channel, that's the time to take it off the table. And at this point, you can see as soon as Baidu started to sell, obviously it triggered something in the markets. Everybody took it off the table at the same time. Probably institutional, probably sell orders, like sell programs, but it doesn't matter. They knew what they were doing because they knew the market was toppy at this juncture. Okay? So, knowing that, let's focus on the leaders now and what might be happening with them. When I say the leaders, we look at all the stocks that everybody's constantly looking at, such as Google and Baidu and Garmin, and Research in Motion, and Amazon, etc. It's kind of a mixed picture here. In some of the instances, I'm very impressed with the rebound on Friday, and in some situations, I'm not. Google is probably the most watched stock out there, and to me feels like a barometer of what's going on in the NASDAQ, and feels like it's almost like a barometer for people's confidence in tech. Well, Google completely took back the entire body of Thursday. Thursday was the bearish bar. Google made still an inside day, but it's not a small body inside day, which would indicate a continuation of trend. It was a big body, and if you look on the intraday chart, it took back most of the move, right? Garmin did a very similar thing. We were trading Garmin a couple of days ago long, did okay with it, got stopped out right around here on the day's low on Thursday before the sell-off really kicked into gear, which was good. But notice what happened Friday. It took the whole move back, and Garmin is trading back at 114. So for this, I'm going to give you a little trade idea. Garmin is probably going to 120 if it clears this pivot because it already wanted to fill the gap anyway. We were trading Garmin long here from 109. It went up to 114. We ended up getting stopped out before the selling, but now it took back. It's probably going to continue to fill the gap for 120. So there's an idea. Google we already talked about. Let's take a look at Apple. Again, inside day, but look where it rebounded to here. Not bad at all, right? If you look at the percentage, not bad at all. It took back a good portion of the move, leaving only this part. Now, one of the other things that makes me feel still kind of bullish about these tech stocks and that they're not ready to give up the ghost yet, which would mean that the S&P and the Dow won't give it up yet, is the fact that we are coming into earnings season, and this is important. Think about this. Google, October 18th. I don't think people want to be a seller ahead of this, okay? Apple, October 22nd. They're already starting to say this is going to be a major blowout quarter for Apple. Should be good numbers. I don't think anybody wants to be a seller ahead of that. Remember, anything can happen. I am not a bull-tard. Please don't call me that. So it doesn't really matter to me. I could care less. Apple could certainly gap down on its earnings. Google could gap down on its earnings. I'm just saying the numbers are coming. It doesn't feel like anybody wants to be short or out of these stocks ahead of the numbers. So let's keep that in mind. Garmin, we already talked about. A huge retracement. Trade idea there. I do think Garmin is probably long over 114 to fill the gap to 120. Garmin has earnings on October 31st. It is also Fed Day on 10/31. Remember that. Halloween, Wednesday, 10/31, which is still a couple of weeks ago, is going to be another FOMC meeting. So let's keep that in mind. This is also something that I think may be a catalyst to be holding the markets up a little longer because nobody really wants to be a seller or short ahead of that, since the consensus is that there may be another rate cut on the horizon. Okay, so that's what I'm thinking at this juncture. Tech, mixed signals on the leaders. Let's watch the leaders into the coming weeks, see how they act. If we can see that all of these top stocks, such as Research in Motion, Apple, Garmin, Google, etc., Baidu, all of them take back the prior highs and basically nullify the Thursday action, I would say you're okay in tech. If you're okay in tech, which has been leading, then the S&P and the Dow should be okay. All right, let's take a quick look at the volume matrix. We did get a distribution day on Thursday where overall volume was up strongly. I give it a D for distribution. Markets were down. Tuesday was a big rally day. I gave the market an A for accumulation. And then again, here was our weak bounce on Friday, which I didn't like very much. Breadth, by the way, was not very convincing here on Friday. 61 and 76 were my ratios. I'll scoot this over a bit if I could. See my S&P intraday? 61 was your ratio. Check this out. This is something of interest I'll leave you with. When we rallied up the last time in the S&P, this breadth ratio did not make new highs. So there was probably less action under the hood in terms of volume going into up stocks on that last move. Just something to think about. Not sure yet if it's going to play out into a rollover or weakness. But as I said before, I'm going to be keeping a close eye. Let's just close out with the SPX here. Inside day usually means continuation of trend. However, that trend itself was only one day. We still have yet to violate those lows. And obviously, we are still way above the uptrend line. All right, earnings coming out now of the big tech names, as I said, and Fed on October 31st should be interesting. I am tentatively bullish. I am cautiously bullish now. I'm still bullish, just a little bit more cautiously bullish. And that's that. On behalf of myself and the entire ShadowTrader team in beautiful Philadelphia, Pennsylvania, and of course, as always, from all the good people in Chicago, Illinois at Think or Swim, I wish you good trading and good night.